as promised, it's time to do that robust business conversation, and it will take us 55 minutes. So in the next 55 minutes, we're going to tell you about the good news going on with Ikeja Disco. There's been a slash of tariff, and it begins today, May the 6th. Also, we head to Zimbabwe, where the new currency, the Zimbabwe gold, is now in use. We move to Ethiopia, where 40% of the Ethiopians are undocumented. That means they miss out on some of the largesse that the government has for its people. So this is what we're going to bring you, the details of it, in the next 55 minutes. But let's begin from the commodity space. Global oil now features, it climbed on Monday after Saudi Arabia hiked June crude prices for most of it. We see the numbers right here, and we see that Brent is up 0.4%, $83.30. WTI is also up 0.4% at $78.45 a barrel. And yes, the factors driving it include that Israel-Hamas conflict. The possibility of a ceasefire seems further away at this time. Also, Saudi Arabia hiking its price to some of its major customers. That has also affected, and those major customers include Asia, Northwest Europe, and the Mediterranean. And that's for the features of June. And of course, in China, we see that there's been a consistent recovery in the demand and activities in the manufacturing sector. So that also signals that there will be higher demand for crude, which has led to that increase in oil prices. Still in the commodity space now for metals, gold prices gained on Monday, deriving support from a soft U.S. dollar after weaker than expected jobs reports revived expectation that Federal Reserve will cut interest rate later this year. Spot gold, we see, is up 0.8% at $2,320.33 for an ounce, and U.S. gold futures up 0.9% at $2,339.10 per ounce. So last week we saw that the US dollar dipped to its lowest level in about a month after that employment data. That was on Friday, showed that job growth had slowed more than expected. That might mean that the rate cut is kind of sure, but of course things are changing. The data boosted bets of September rate cut to 71%. So the likelihood of that cut being in September is 71%. And to one of those stories we promised you, the T is one. The Ikeja Electricity Distribution Company has slashed the tariff payable by its Band A customers to 206 naira 80 kobo per kilowatt an hour from the 225 naira kilowatts per hour approved by the Nigeria Electricity Regulatory Company. The spokesperson for Ikeja Disco, Olufadeke Omoriodio, said that the downward tariff review of the Band A customers will take effect from today, Monday the 6th, 2024, and the Disco, while guaranteeing a minimum of 20-hour daily power supply for those on Band A feeders, notes that the tariffs of customers on other bands remain unchanged. Well, the tariff for Band B, Band C, D, and E are unchanged at this time. Now, a lot has been said. I mean, over the weekend, we did get, if you use any of the fintechs, you'd have gotten a message telling you that transactions that are related to cryptocurrency will not be accepted. And it's not the first time we've had this with the deposit banks. And then the week before that, or days before that, there was the news that fintechs are not allowed to onboard new customers. So a whole lot seems to be happening around that space, the financial sector, looking at the fintechs at this time. To tell us really perhaps what's happening, help us understand, and some of the implications, is the managing director of one of those fintechs. He's the managing director of Stellar's Digital Bank. Bukola Olutayo joins us virtually from London. Mr. Olutayo, good afternoon.
Good afternoon. Good afternoon.
So we see that, I'm good, thank you. So we see that the fintechs have the attention of the central bank now. Have you guys been called into a meeting? Could you give us some of the lowdown, what to expect where all this coming from. We also hear that some of the fintechs are being used for, fraudulent transaction. I mean, that could happen to any of the fintech or any of the financial institutions. But give us a lowdown of what's really happening there, your conversations with the CBN, and all of that.
Good afternoon once again. Really, it's normal thing that that the regulators do often once in a while. I think basically what the CBN is looking into is how to ensure that KYC and process of onboarding customers are really done according to the way the regulators have stipulated it. And, recently the CBN actually gave a regulation of CDD regulation for 2023, also with anti-money laundering for 2022. And also there was also a memo that came out the other time as regard some account and wallet transactions. Basically, I think what the CBN is just trying to enforce here is to ensure that the fintechs are complying with the KYC regulation according to the CBN standard. And when we look at this KYC regulation, the KYC regulation has to be done on risk base, and oftentimes, when you want to open an account for a customer, you ensure that you do it on risk base, and that means that you want to ensure that the verification and identification of your customer is based on the risk that is attached to each of these customers. So if the risk is low, you do simple CDD or standard CDD. When the risk of the customer is high, like a politically exposed person or anyone that has been involved in fraud before, you do enhanced CDD. So basically, these are some of the things that the CBN is trying to ensure. And if a particular account has been flagged for any particular illicit transaction, what the regulators usually do is to investigate that account. And the only way you can investigate an account is to ensure that the account has an adequate KYC documentation that allows the regulators to be able to investigate and catch up with that person. And that's basically what the regulators are trying to do. And what the regulators have said is that, okay, they've sent a memo telling the fintech to ensure that we all stipulate with this KYC regulation. And once that is done, I think that we will all be fine. And also know that most of the accounts opened by fintech are done electronically. So it's more or less like also improving our technology to be able to perform these KYC processes electronically. So ensure that we are able to do all that and ensure that the risk of onboarding a customer that will use an account for illicit transaction is very, very low. So that's just basically what the CBN is trying to do.
So this instruction of no onboarding of new customers, do we know how long it's going to last for?
Once every fintech has been able to comply, the next thing is to communicate to the CBN that you've been able to comply with, or comply with it. And the truth is that complying with KYC processes are always ongoing. There are old accounts that some institution had that probably when they were onboarding, the KYC regulation there were different. Last year, December last year, CBN brought out a memo that all wallet transaction or virtual accounts that most fintech use must either have a BVN or an NIN. And there are old accounts. So these things are ongoing. They will keep on working on it. And you know that they also say that accounts that are open must be tiered. That is, they're going to be tier 1, tier 2, tier 3. And then the KYC that is required for each of these accounts are different. So most of the fintech are now trying to comply, in retrospect. So once you've been able to do that, the next thing is just to give evidence that you've been able to comply with all these things. And I'm sure that the regulators will release, or maybe should I use the word unban or unfreeze the institution that has been asked not to onboard new customers.
Okay, so in essence, you're saying that it's not all fintechs that are affected at this time. Some fintechs have been frozen because they have customers that have not met up with this KYC requirement.
It's not all fintech, definitely. It can't. The issue can affect all the players in the industry. So it's just basically some few set of people that they feel that they've not been able to comply with this particular process. And as I said before, it's an ongoing process. I really don't see a major problem in the industry. There's no cause for alarm. Once they've been able to comply with this process, it will there won't be any issue. And as regards accounts that are used for illicit transactions, many times, even if you have the best KYC, it still can't stop. It still might not necessarily stop people from using their account for illicit transaction. But what is important is that the players in the industry, whether it's a bank or fintech, must have enough documentation or information about the person that will lead the regulators to where the person is. Part of the things you're going to collect is identification of the customer, their address, whether it's the home or address or anywhere the person can be found, So once you have all that, and when there is the account is used for illicit transaction, your responsibility as a player in the industry, whether you're a fintech or a bank, is to provide the information whenever the regulators come. It could be EFCC, it could be any other arm of the body that comes and say that, okay, we want to this account because it has been flagged to have been used for illicit transaction. So you're able to provide those details, and once you provide it, you are not supposed to be you're not supposed to have any problem, except if the account or if the institution does any transaction that the regulators has proscribed them from doing. For instance, maybe a cryptocurrency or whatever. That is where another problem could come from. But if the financial institution, the bank, or whatsoever had not done any transaction that the regulators had not prescribed them to do, then they are fine. Yours is to provide the details and allow the regulators to be able to catch up with whoever has used their account for illicit transaction.
And I guess at this time, cryptocurrency is defined as illicit transaction at this time.
Yes, at this time, it is not allowed in Nigeria. It's not allowed to, it's not allowed to pass through the banking system in Nigeria. That's because the CBN believes that it's going to create some instability to the financial sector or to the system in Nigeria. And I believe that when it even comes to cryptocurrency, all that is required is probably a more stringent and enhanced KYC or anti-money laundering or CFT regulation to actually control that area. But because the institution or the regulators are not ready yet to be able to bring out a proper policy to guide that area, I think that's the reason why the regulators are saying that, no, don't let us go into this yet. But when we are ready, we would allow you to be able to go into it. We have some countries that have allowed it. Countries like Singapore and the rest have allowed it because because the regulators have already brought out policy that would guide and streamline the transactions that happens within the cryptocurrency and ensure that if by the time the cryptocurrency transactions happen, they will be able to identify the ones that are being used for illicit transaction or not. But the problem most time that regulators are having is that most time when the regulators want to regulate the cryptocurrency, the players within the cryptocurrency do not really want this. They are not really open to regulation because cryptocurrency is said to go through a blockchain, and most of the transactions in the blockchain are not easily traceable. If a transaction is not easily traceable, then regulators will not really be interested in allowing it to go through into the system because it could distort the financial system of the country.
Yeah, and I remember the CBN governor alluding that, some illegal funds were passed through the cryptocurrency block. But anyway, so let's head back to fintechs now. Since this news and the attention of the CBN on fintechs, I've learned of some customers that have, left because of the fear of, when you talk about fintechs, obviously everything is virtual. If anything happens, I don't know who I'm going to hold, and how am I sure that they will not just shut down? You know, these are some of the fears that your customers, your fintech customers are having at this time. I wonder if, I know a couple of you are insured by NDIC, but people will wonder, if I don't have a physical address, how do I even get through to you to lay my claims?
Yeah, well, I think it's still part of the underdevelopment in Nigeria. We have a lot of digital banks in the US, in the UK, and everywhere. The most important thing is to ensure that you know the people that are behind this institution or the financial institution. Look, let's assume that Nigeria is not developed up to a point whereby we can have banks running online purely. Most of the digital banks we have today, they still have physical address, because based on CBN regulation today, you can't run a bank, whether it's digital bank, new bank, or traditional bank. You have to get a license to be able to run a bank. And most of the license that most digital bank has is the microfinance bank license that allows you to at least have one office, you understand, at least an head office, where at least your customers can definitely walk in if there's any issue and all that. But basically what most digital banks are trying to do is to make life easy for their customers, such as bringing banking to their home doorstep, rather than they coming to the banking hall and standing for so many hours before they're able to get one transaction done. There are people that spend the whole day because they want to get just particular transaction done. So it's that particular problem that the digital bank are trying to solve by bringing banking to their doorstep. However, if the customer still wants to come to the bank, I believe that most digital banks still has at least one office, which is their head office. Because according to the CBN law today in Nigeria, you are required to have at least one office based on the license that you are actually using to run the bank, or run the institution. So there is no digital bank in Nigeria as of today that doesn't have an office. You must at least have one office where you can easily be identified, because regulators, the CBN, also come in there occasionally to perform their own audit or checks. So there is actually no bank that doesn't have an office. At least you must have one office where the regulators or customer can at least walk into. It's just that the mode of operation or the operational strategy is to ensure that people don't come into the bank, but as much as possible, the bank is able to come to them and ensure that all the problems are solved online. So that's just it.
All right, and I know this is more recently, there have been reports of transaction failures, even though it's more with the deposit bank, but you are in the system. What's going on is that, I mean, when we had the mass japa, we knew that there was a brain drain that affected the ICT department of most banks. Is that what is causing this, or is there a new wave going on?
I'm not going to say 100% that I understand the reason for that, because in Nigeria today, the technology used for moving funds from one place to another is not resident with any bank, and is not resident with any financial institution. That is 100% handled by the Nigeria Interbank Settlement System. So really, I'm not sure if failure of a particular transaction is caused by a particular bank. However, there are some tech infrastructure that each of the financial institutions too will have in order to be able to run their system. And there's a basic infrastructure that every financial institution is supposed to have. If you don't have that infrastructure, you can't actually run it as a fintech or a bank. So there are times that banks might have localized issues. They might have localized issues that can only be explained by each of the bank itself. And I can't really you really tell if it has to do with maybe the brain drain or whatever. But it could be any issue, and it could due to technology. It could be any technological issue that could happen to any institution or any bank that had allowed maybe transaction to fail, from that particular bank. But if we have a situation whereby there is transaction failure generally within the system, that has to do with the shared infrastructure that we are all using. But if it's a particular bank that you notice that their transaction is failing, or if in a particular fintech that their transaction is failing, then that's a localized problem. That's a localized problem. But so I won't really say it's as a result of the brain drain that is happening in Nigeria. No.
All right, thank you so much, Mr. Bukola Olutayo, the Managing Director of Stellar's Digital Bank. Thank you for giving us some insight on what's happening at the back end of our monies.
Thank you very much for having me.
All right, let's take a break now. When we come back, head to the market, and as we have other conversations waiting for you right here on Business Incorporated. Just stay with us. Welcome back. Still watching Business Incorporated right here on Channels Television. We head to the markets now with good news. Will is very proud of the market this afternoon.
Good afternoon,
just this morning, when I was doing the market analysis from last week, I was like, one of our analysts, the one who looks at the crystal ball, Abdurrashid Momo, I said, if we can manage to get back to 100,000, then we're going to hit a new resistance level. So now we're on the 100,000.
Now we are heading for that resistance. So we're going to hold him. We're going to hold up the
Exactly. I think so.
But we see the market doing pretty well at intraday. Hopefully we close in the green.
Yeah, and I'm sure
this is a good start for the week.
Yes, it was a good close last week.
Yes.
So I'm sure it's the most liquid counter that is driving.
Yes, we do know the banking stocks are up and running. Investors are really feasting on those stocks.
And we haven't headed to the market yet for our recapitalization.
Oh, no, not yet. But bullish sentiments are coming out, so maybe good news for banks and not so bad in terms of how they raise their money, despite the fact that retained earnings have been excluded. But I think there's still some liquidity for banks. They're not all that, in the red yet. So let's look at the major equities in Africa where sentiments were positive at intraday. Nigeria's NGX is kicking off the first trading day with bullish sentiments. We're seeing that drive. It's gone back to the 100,000 level and then some. And then we're seeing that up 0.75%. South Africa's GSE was also in the green at intraday. It was up 1% at 77,000 points. Now elsewhere, Egypt's EGX 30 is closed for a national holiday. Meanwhile, Kenya closed Friday's session in the red. We're seeing that downtrend as a result of the downtrend in the shilling as well. Now let's check out happenings at the NGX. And joining us is Mukhtar Mohammed, CEO Finance with Mukhtar. Good afternoon, Mukhtar. It's good to have you on the program. Mukhtar, we're seeing bullish sentiments at the NGX. So what's driving this? We just talked about banking stocks, but what's this frenzy right now? Because we did think that there'll be a dampener as a result of the recapitalization plan, but right now we're seeing investors very strong on the banking sector, and we've seen that push at intraday. Can you just give us more insights as to what's happening?
Yes, I think, thank you very much, Will. This afternoon has been a little bit bullish especially like you said, from the banking stocks. I think two things are driving the banking stock at the moment. Number one has to do with the recapitalization plan that was submitted by the bank. We didn't get any feedback from CBN to say, they didn't remember they gave them a deadline of the end of April. They were able to meet that deadline, and some of them have also submitted their recapitalization plan, and some of them have told their shareholders what their recapitalization plans are. So mostly that was the good news. And then the second good news that really drove the market was the news about the results that came out from the banking sector. So the tier one bank, they are the driver of the banking sector. And so this result from the tier one bank also a very exciting result, especially from a company like GTCO, or the highest any Nigerian bank have ever done for first quarter, 450 billion profit after tax. And that is more than what they even achieved throughout last year. So that also then Zenith Bank came up with their own result, also profit after tax, also was good. And UBA also came, and also Access Bank. So all these two were the key drivers of the market, and we saw the positivity in the banking stock. And this afternoon trading, Zenith Bank is trading on high about 37 naira. Also with GTCO is about 41 naira 90 kobo. Access is doing 18 naira. UBA is doing about 26 naira each cover. So it sounds to be good news for the banking sectors, and investors seem to be very interested in that space, especially, like I said, after this first quarter result and the recapitalization plan that have been submitted by the banks.
We see the other banking stocks are doing well, not just the tier one banks. Fidelity Bank was up at intraday. FCMB was also up at intraday. What are these tier two lenders? What is their plan, especially with the recapitalization? What is their plan? Are investors also bullish on them? And do you have any insights for us?
Well, for the tier two bank, I think investors are bullish, especially with Fidelity and FCMB. FCMB have come up with their plan. Fidelity has come up with their plan. I think investors are bullish there. And again, from the feeder we got from CBN, some of these banks, also the tier two banks, are thinking of a merger. They're thinking of merger. No one seems to be thinking of acquisition. They're thinking of merger. So I think that also is what is driving that sector. But when you look at Fidelity Bank, based on what they've done over the years, especially since the coming of their new board, it has been very impressive. So investors are looking at that numbers from Fidelity Bank. FCMB, you remember, it's a holding company. They've been able to drive growth. They are paying the highest dividend they have ever paid this quarter. Same applied to Fidelity Bank. So I think for that quarter, we are seeing those. Even Sterling Bank also have come up with their own recapitalization plan. The only one that seems to be a little bit shrewd in a lot of issues has to do with maybe Wema Bank. People are still waiting which place direction. Stanbic IBTC also is doing where they've come up with their recapitalization plan. Even the big elephant, the first bank that are going through crisis, also have told us they have some plans already on ground, and you could see that also helping their stock to grow to about 28 naira at the start of intraday trading. But again, investors are still very cautious because still look at the first bank as a sector. It's a bank that is driven by power play of who wants to take controlling stake of that bank. So for now, it seems bullish for all of these banks going forward. And I think it's good time for investors that are in those banking shares.
Okay, let's look away from the banking sector now. Telecoms. So we've seen MTN Nigeria reported over 575 billion naira in pre-tax loss in first quarter of 2024. Yet investors are still bullish despite FX losses that dragged the bottom line.
Yes, investors are bullish because they also came up with a plan. When you look at it, so sometimes people are just cautious looking at only the losses. The profit after tax outside even the provision, I mean, is about 38% better than what they had last year. So again, everybody know the challenge has to do with the FX volatility, FX rate, and we see this rate moderate a little. Remember that some of these banks, telecom company got at the time they were putting these numbers down, FX was exchanging for 1,700, 1,800, but today is doing 1,400. So that shows that there's a little bit of recovery. And if you look at the MTN on, you see they came out with a master plan. They have to renegotiate some of their contracts. The MTN group at itself also is planning to make sure that they inject liquidity into the system. And in all of it, what is exciting investors, where I think investors are going for MTN at the moment, is because MTN is not thinking of doing any addition in terms of share dilution, because they are coming up with strategy, cost-cutting measures to make sure that some of the profits are in turn seen in the bottom line. And MTN has given also a clear cut of what they want to do. They've told investors in clear terms that throughout 2024 they shouldn't expect so much good earnings in terms of result for this 2024 year, and they'll be working towards rebuilding their financial status, their bottom line, and other. But by 2025, they think that they will be in profitability. So a lot of investors are seeing that. Most of the investors that are keen into MTN today are keen in for the long term because of what the plan that MTN has said. Like I said, there are cost-cutting measures they are put in place. They want to renegotiate some of their contracts, their mass contracts with some of their vendors. They are also even renegotiating some of their payment with loans with some of the banks and others. So, and giving themselves a clear 1 year to make sure that all these backlog are cleared up. And again, like I said, you could see that in terms of the exchange rate, the number seems to favor them at the moment at 1,400. And there's still prospect that before the end of this year, we may have the exchange rate to about 1,000. So all these are what is fueling sentiment for MTN.
Definitely, we'll see a boost in the telco sector, especially with the telco tariff hike that isn't going well, negotiations are going on, or the clamor for new tariff hikes for telcos. We'll definitely see some boost in that.
MTM also said that during their report that they are already negotiating with regulator for tariff hike, and that they also think that it will also boost their bottom line, and also they are going to reduce the volatility in terms of FX. They are trying to they are in negotiation with locals rather than so that most of their transaction will be done in Naira instead of FX.
Thank you so much, Mukhtar Mohammed, CEO Finance with Mukhtar, for sharing your insights on Business Incorporated. Now we head to the Middle East. Major stock markets in the Gulf were mostly negative at intraday amid high oil prices and rising hopes for an early interest rate cut by the U.S. Federal Reserve. The Abu Dhabi index was down 0.05% at intraday. Dubai, however, was up 0.38%, and this was supported by gains in real estate, utilities, industry, and communications sectors. Now, still within the region, we see the Saudi index down at intraday. Also, Qatar index is also down at intraday. Now, we know that the Saudi Tadawul Group, that's the exchange, has reported a net profit of about 202 million Saudi riyal in the first quarter of 2024, and that's a 122% surge year on year. Now, revenues leaped, that's flew to 72.8% year on year to 387.6 Saudi riyal, that's 387 million Saudi riyal in the first quarter of this year. And you see, that's according to interim financial results. Also, the earnings per share, EPS, hit 1.68 Saudi riyal in the 3-month period. Now, meanwhile, dividend payouts are still ongoing in that country. Now we see the U.S. markets very quickly. Now we see stock futures ticked up in early trade on Monday after the major averages ended the previous week in the green on weaker than expected jobs report, which revives hope of the Federal Reserve's cutting interest rate cuts soon. We see Dow Jones up 0.22%, S&P 500 also up 0.25%, and the Nasdaq futures up 0.2% as well. Now, fresh data from the Labor Department is coming in. That's from Friday, showed that the U.S. economy added fewer than expected jobs in April and an increase in unemployment. Over the weekend, very, very interesting news. American businessman investor Warren Buffett's company, that's the Berkshire Hathaway, has held its annual shareholders meeting, and during which it announced that it had reduced its stake in Apple by 13%. Meanwhile, investors are still watching key companies to set the report this week, including Disney, which is tomorrow, and Uber on Wednesday. Now let's look at Asia markets very quickly. The markets tracked Wall Street gains on Monday as softer than expected market reports, that's the jobs report, fueled hopes. We know that the U.S. is going to cut rates very soon. Japan and South Korea, however, are closed for a national holiday. Hong Kong's Hang Seng Index rose 0.5%, while mainland China, Shanghai, rose 1.16% to close. Now, Australia's S&P ASX 200 rose 0.7% to close, marking a third straight day of gains. Meanwhile, investors are awaiting the Reserve Bank of Australia's rate decision tomorrow. However, the analysts are saying that Australia's inflation data was better than they had expected. Also coming out of that region today, a fresh PMI data from Hong Kong and mainland China, while we expect China's April trade data on Thursday. So, we're seeing very bullish sentiment for China and offshore, that's Hong Kong, but you see Japan and South Korea on holiday. We see Australia's inflation data coming in and, bringing that bullish sentiment back into the market because they're saying it was lower than they expected, not as high. So they're seeing some green lights in that
interesting
market.
How everything is connected to the United States. So we had the job data out on Friday, and not very good, and so everybody is being
they're optimistic that the rates are going to come.
Yes. I wish one day that Nigeria's macroeconomic indices will also affect other markets.
Oh, okay.
I mean, I think I'll feel on top of the world.
I will too, but I'm thinking, I have to think about that.
You can't imagine it. It will happen. All right, Will, thank you so much. Well, now let's head to Europe, where it's another chapter in the ongoing spate between the EU and China. European Commission has opened yet another investigation into China. Doesn't look like China is going to have a lot of peace, with the EU. But let's have Lars Holter now give us the details. Hi, Lars. What has led to this latest investigation into China's operations?
Thanks for having me, Ini. Yes, the European Commission is at it again. They've launched this probe into Chinese public procurement of medical devices last week, and it is the first investigation under the EU International Procurement Instrument. Now, that instrument aims to prevent countries from unfairly favoring domestic suppliers, and that is something we've seen for years, that China doesn't grant fair market access to foreign companies, meaning that foreign companies like EU businesses are allowed to produce and sell products in China, but that they're often overlooked, for example, in government contracts, which is exactly what we're dealing with here. The EU now says that the investigation is supposed to be concluded within 9 months, and if the Commission finds that European suppliers don't have fair access to the Chinese market, it could place restrictions on Chinese medical device companies bidding in EU public tenders.
So while this is not the first time, it doesn't look like there's an end in sight concerning this issue with China.
Certainly, we're seeing this all the time now. Another example is the problem with illegal subsidies. Beijing pays generous subsidies to their industry so that Chinese companies can sell products way cheaper than companies from other countries. The EU regularly reacts to these kind of shenanigans with import tariffs, with China threatening counter tariffs. So that is the game these days. And here's the latest example on the subsidies front. We're talking about wind turbines, specifically for wind park developments in Spain, Greece, France, Romania, and Bulgaria. The EU says most recently here 2 Chinese bidders have benefited excessively from subsidies in their offers for a wind power park in Romania, meaning their products were bought due to their lower price tag, which in turn, of course, was only possible due to financing from Beijing.
Yeah, it reminds me of an incident in Nigeria, in Abuja, where Chinese supermarkets would not allow even Nigerians to buy things from there. Well, I guess China has to, they have to watch their back. Well, let's head to the market now and see investors' sentiment at intraday.
Well, first of all, things are looking pretty calm this morning in a positive way. After a bit of a hectic week, the German DAX is in positive territory on Monday morning, but it's right around 18,000 points, and it's been for a while, and that is a tough hurdle, as it seems. Whenever the index crosses the 18,000 mark, investors tend to take some profits. Anyway, Asian markets have been sending some positive signals to Europe, and right here, we're expecting some more economic data throughout the day, mostly about their service sector, and no doubt anything will be thoroughly debated as to what the numbers will mean with regards to future interest rate policy. We're also expecting quarterly numbers from BioNTech, and that is, of course, the biotech company that developed the COVID vaccine a few years ago and saw shares skyrocket during the pandemic. Ever since, there's been a bit of weakness, although the company remains active, currently mostly working on cancer treatments.
All right, Lars, thank you so much for that update. Now we're related to that, somewhat related to the data. Earlier, myself and Will were talking about how the markets in Asia, everywhere, reacting to that jobs data from the United States, which came out on Friday, and we see everybody is excited, or the markets are excited, because of the hope that interest rate cuts will start by September. That's the United States now. Apart from that, also reacting to that on a bigger front is developing nations. That sovereign bonds have slid by the most in 7 months, while a gauge of currencies fell to the lowest in November as fears over higher for longer U.S. interest rate and worsening geopolitical tension. So it does seem, yes, it's a global village. The world is a global village, but led by the dollar or the U.S., or is it not? Well, let's discuss this and how it's affecting Africa, developing economies now. And joining us for this conversation from the capital of Ghana, Accra, is the founder and chief market analyst with CellStrach. He's founder, chief executive of CellStrach, and his name is Ken Carr. Mr. Carr, good afternoon. Good to have you on the show.
Thanks for having me, Ini. Good afternoon.
Yeah, so myself and Will were discussing earlier about how exciting it would be to have macroeconomic indices of Nigeria moving markets around the world, which is what we see now. Every minute of the Fed, US Fed, moves markets one way or the other. I wonder if you think Africa can get there, or at least can be detached, from being affected by statements from Jerome Powell.
Thanks, Ini. Very interesting question. You know that markets lives and breathes by every word coming out of Jay Powell's mouth. But I think the expectation is that Africa's central banks and largest economies like Nigeria, Ghana, Morocco, South Africa, and Kenya will maintain tight monetary policy rates and also keep interest rates steady in the near term. But let's take a step back, just as you said. Last week, Wednesday, was the FOMC meeting, and Jerome Powell took the stage, and then he and his committee members maintained the policy rate at 5.5%, and also reiterated the policy guideline that interest rates will be held higher for longer. Now, 2 days later was what markets were waiting for, which was the non-farm payroll or jobs data, which came in at 175,000 jobs created for the month of April, with expectation for 238,000. This fell obviously below expectation, but interest rates also rose 0.1% to 3.9. Now, the story is that how will Africa benefit from this? Well, one thing that comes to mind definitely is the lowering of cost of borrowing. If, of course, companies and corporations will see a rate cut somewhere in September going into election time in the US, we are going to have some little breather in terms of the cost of borrowing being lowered, and then we will also get the cost of servicing our debt, especially with Ghana, since we are on an IMF program, relatively lower. Another thing, of course, is that African economies tend to have foreign direct investment into their countries with lowering interest rates from the US. Companies that borrow at a lower cost from the US will try to seek higher returns in emerging economies, as I've mentioned, like Nigeria, Ghana, Morocco, South Africa, and the likes. But if you ask me, I think we need to wait, because the Federal Reserve is data dependent. The Federal Reserve is also saying that they need to have more confidence in inflation being well anchored and nearing its 2% target before they can consider lowering interest rates. Interestingly, markets are pricing in about 2 cuts or 3 cuts getting to the end of the year. But election year coming in the US, will the United States Federal Reserve cut interest rate 2 or 3 days after the election? I don't think so. So I think it's a wait and see game as more and more data comes in.
What do you say, Mr. Carr, that if Africa looks within and boosts intra-African trade, there'll be a reduction in this dependence on, every word and statement that comes from the United States?
Well, very much so, because we see interest rates and exchange rate volatility whenever there is an FOMC decision. Looking at what Africa currently is doing with the PAPs, and we trying to find ways and means to transact amongst ourselves without really depending on SWIFT or really depending on the volatility on the dollar, I think that gives an avenue for us to be self-dependent and then work together to be able to stimulate our economies and grow our economies without being dependent on the US dollar. But then again, these are early days. We are seeing transactions going through PAPs. We are also hoping that this will continue to ensure that we are more interdependent than dependent on the US economy and as such the US dollar.
Yeah, but I mean, that's also another problem, especially when you look at, yes, we hear of PAPs, but how effective is it? On the other hand, we've been talking about ECO. That is supposed to be like a common currency. We talk about logistics, and it's more expensive to export to a neighboring African country than when you send it outside. So it seems there's a huge mountain of hindrances that is against the continent?
Exactly so. This is more dependent on the political cohesion of our governments. We as Africans need to depend on ourselves, and we as Africans need to look at the political hurdles and then some of the trade hurdles that are confining us from, really seeing the impact of these payment initiatives and see the full benefits of what we stand to gain. At the end of the day, again, it's a political season. A lot of countries will be going into elections in 2024. I think that at the end of the day, come what may and whichever government comes into power, we need to take a bigger look at the future and for the next generation and how we can just work together as a country or as a continent and reduce the trade hurdles, reduce the political hurdles as well, and make way for more and more transactions. Because the sooner we do that, the more benefits we stand to gain and the more interdependence we'll be on each other than looking at foreign countries and advanced economies.
Mr. Carr, thank you so much. And we do hope, of course, that there'll be more trust and trade within African countries. Mr. Ken Carr is the founder and chief market analyst of Ken Strach.
All right, thank you for having me.
Now let's head to Zimbabwe, where the Zimbabwean authorities have announced motorists can now buy petrol and diesel using that new money, the ZiG, Zimbabwe Gold. According to the Zimbabwe Energy Regulatory Authority, that's ZERA, a litre of diesel will fetch 22.24 ZiG, while petrol will be charged at 21.15 ZiG per litre. According to ZERA, the prices are for May 2024, based on M1, and they will be effective up to June the 4th. Operators are allowed to sell the petroleum products below the prescribed prices, depending on their trading advantages, and should display prices in a prominent place as provided for by the fuel pricing regulations. And still in Zimbabwe, top Zimbabwean officials are in South Africa to drum up support for the country. Zimbabwe just concluded a two-day investment summit in Johannesburg. And this comes just weeks after the country launched its new currency to try and revive the struggling economy. The country's finance minister, who was there and led the delegation, says that his country is open for business. And on our foreign programs later on today, you would get a full report of that. Talking about South Africa, the rand is stronger in early trade on Monday after private sector activity rose marginally in April. The rand traded at 18.46 against the dollar. That's about 0.3% stronger than its previous close. And the dollar traded near its previous close of 105.17 against the basket of global currencies. South African private sector activity rose marginally in April as an improvement in business confidence encouraged companies to expand purchasing activity and staffing levels. In Ethiopia now, we see that the documentation has been a problem, as we see that 40% of Ethiopians are undocumented. And what this means is that they are excluded from most of the country's policies, government policies, which is supposed to benefit the Ethiopians, especially those captured as the formal sector. So with a larger population in the informal sector, they cannot reach some of the positive policies from the government of that country. Now let's head to the crypto space and see what's happening there at this time. It seems the bull is out, in major markets today, because when I look at the board, what I see is green. Different shades of green is what we have. And it's a very greedy market, as we see that Bitcoin has gone up to 65,135.70. That's gaining 2.05%. That's about, off for the weekend, it was a gain. I saw it at 63, and now it's at 65. Ethereum following suit, well, Bitcoin is the leader, isn't it? 1.58% Solana, Cardano, everybody is looking very green at this time. And I think the index, the green index is about 70, more than 70%. So it's a very green market. But let's see the headlines and to lead our conversation. Binance is set to remove BTC, Ethereum, and USDT pair. We'll have our guests, Olumide Adesina, to help explain that. Ethereum hits 30-day low in exchange reserves. That's also a headline. And Cardano faces new risks and potential price decline when everybody's going up. Well, fine. Let's have Olumide Adesina now join us to explain some of this. Hi, Olumide. Good afternoon. Olumide, can you hear me?
Yeah, I can hear you loud and clear. Good afternoon.
Great. So Binance is set to remove BTC, Ethereum, and USDT pair. What's that?
The news is just developed. I think, Binance, this definitely weighed on the market. This is a crypto exchange, that has over 190 million users worldwide, and dynamics role it plays in the market. So while the news is not really deeply clear, I think it had a deep impact on the price. We saw Bitcoin at the lower daily rate today from 65,500 high to about 63,500. I think if you look at the way the new Binance team is positioning themselves, they want to be more regulatory compliant and reduce the appetite for risk, particularly at their contract market. So I think while spot is much more active, I think it's users in the derivatives that are going to be active on, going to react on this. But I think this is just a short term. Despite the fact that we're seeing a pullback, the price looks like it's going back up above the 64,000 mark. And I think that really tells you that investors are not really concerned about that.
But do you see this as the run that will lead us to, our highly expected 100,000 and all of that for Bitcoin?
Trajectory very likely, because if you look at present outlook and the fact that Bitcoin has gained about $10,000 from its dip. You recall that at the start of the month, Bitcoin fell as low as $55,000, and we saw that uptick in buying, particularly from key institutional investors in the space. That also brought in some hope among the bulls. Then most recently, PayPal's inclusion of crypto trading definitely also regard buying pressure. So yeah, I think the race to 100,000 is definitely on, but it's not going to be a straight one. There might be pullbacks, but what the bulls will be looking at is, as long as Bitcoin maintains the $50,000 mark, it seems that that can be met within a year.
All right, and just briefly now, Cardano, what's going on? What risks do they face and potential of decline in price?
I think the space in the ecosystem, the attraction Cardano wants command definitely has moderated deeply. Look at what the elephant in the room now is Solana, and the fact that Ethereum is still calling the shots. All these players definitely will be hit, and that's why price action already looks like Cardano might face trouble ahead. But having said that, you can't rule Cardano out. Interesting, he has a play in remittance in Africa, so it's just more like a wait and see approach, but the odds are definitely against it.
All right, I guess with the markets, we always have to wait and see. Olumide Adesina, thank you so much for your perspective this afternoon.
Thank you for having me.
All right, so it's a wait and see, even though we see Bitcoin surging now. If you're an investor in Cardano, you might want to look closely and see what decision to take next. But that's it on Business Incorporated on this very first working day in the week. We have 4 more episodes of the program, and we promise to keep you updated on what's going on in the global world of business. I'm John McCall. See you tomorrow morning, 10 a.m. Enjoy the rest of your day.